Ladies and gentlemen, good day and welcome to Rico Auto Industries Limited Q4 and FY26 earnings conference call. As a reminder, all participant line will be in listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Before we begin, this conference call may contain certain forward-looking statements about the company, which are based on belief, opinion, and expectations of the company as on date of this call. These statements are not the guarantee of future performance and involve risks and uncertainties that are difficult to predict. From the management we have with us today, Mr. Arvind Kapoor, Chairman, CEO, and Managing Director, Mr. R.K. Miglani, Executive Director, Mr. Kaushalendra Verma, Executive Director, Mr. Naveen Sirath, Chief Financial Officer. I now hand the conference over to Mr. Kaushalendra Verma, Executive Director from Rico Auto Industries Limited. Thank you and over to you, sir.
Thank you. Good evening, everyone, and thank you for joining us for the Rico Auto Industries Limited Q4 and FY26 earnings conference call. We are pleased to report that Rico Auto Industries achieved its highest ever annual revenue during FY26, supported by healthy domestic and export demand, operational improvements, and ramp-up of new programs across business. We are OEM supplier, and our export business in US and in Germany is growing despite of ongoing geopolitical issues. Our export to the US and Germany will grow to 2x in next 2 years. Let me begin with the brief overview of the macroeconomic environment, which continues to remain supportive for the automotive sector. Despite global uncertainties, India continues to remain one of the fastest growing major economies globally, with GDP growth projected at around 7% for FY27. A strong domestic consumption, government infrastructure spending and continued focus on manufacturing and localization continue to support growth across sectors. Moving to the automotive industry, the passenger vehicle segment witnessed healthy growth during FY26, with production volume increasing by around 9% to an all-time high of approximately 5.5 million units, while EV adoption also accelerated with electric passenger vehicle penetration, increasing to around 4.2% during FY26 from 2.6% in the previous year. The two-wheeler segment also delivered strong performance during the year, with production volumes growing by around 12% to approximately 26.6 million units, surpassing the previous industry peak. Electric two-wheeler adoption also continued to improve, with EV penetration increasing to around 6.5% during FY26 from 5.4% in the previous year. Looking ahead to FY27, the industry is expected to maintain healthy growth momentum, with passenger vehicles expected to grow by around 5 to 7%, two-wheelers by around 6 to 8%, and commercial vehicles by around 4 to 6%, and three-wheelers by around 9 to 10%. EV penetration in the two-wheeler segment is also expected to improve further to around 7% to 8%, which continues to create opportunities across hybrid and EV-related platforms. Talking about Rico, the business environment remained positive during the year, supported by healthy domestic demand and ramp-up of new programs across businesses. During the year, aluminum and other raw material prices remained volatile due to fluctuation in the global commodity market. However, healthy demand conditions and customer pass-through mechanism helped us to manage the impact with limited effect on margins. We are under discussion with our customer to renegotiate our RM settlement cycle and also discussing renegotiating on the components which is impacting our margin. We are also reviewing our entire portfolio of our business, specifically identification of the low margin products, and will be negotiating with our customer to improve product profitability. We also continue to strengthen our business pipeline with new orders across customers including Toyota, Maruti Suzuki, Hero, Bosch, Cummins, and Knorr-Bremse. These programs across transmission, braking system, engine, and EV-related application provide good visibility and are expected to support future growth over the coming years. Apart from the automotive business, we are also seeing encouraging traction in railway and defense. Supplies have started improving gradually, and these businesses are scaling up, utilizing our existing manufacturing infrastructure and engineering capabilities. Now, I would request our CFO, Mr. Naveen Saurabh, to take you through the financial performance of the company. Thank you.
Thank you, sir. Good evening, everyone. I would like to highlight that the growth during the quarter and the year was supported by healthy domestic as well as export demand, ramp up of new programs, and improved business across our key segments. Consolidated Q4 FY26 highlight, our revenue stood at 677 CR in Q4 FY25, including an export of 102 CR. EBITDA stood at INR 47.8 CR with EBITDA margins of 7.1%. PAT stood at INR 6.9 CR. On a consolidated FY26 highlight, revenue stood at 2477 CR, up 12% year on year, and the highest ever annual revenue for the company, which includes an export of 395 CR. EBITDA stood at 223 CR with EBITDA margins of 9%. PAT stood at INR 52.4 CR as compared to INR 19.2 CR last year. I'll also like to highlight that there were a couple of non-recurring impacts that had impacted the profitability in the current financial year. One, the labor code impact, which is almost 3.6 CR in Q4 and 11 CR for the entire year. Further, there was a lag settlement impact, which was 11 crores for Q4 and 19 crores for the entire financial year. On the lag impact, as KV sir has already highlighted, that we are renegotiating with the customers to bring the RM settlements on a monthly basis, and I am glad to share that 75% of the customers by value have already accepted our request. On the segment-wise performance, aluminium business revenue stood at 2155 CR during FY26, contributing around 88% to total revenue. Ferrous business revenue stood at 322 CR during FY26, contributing around 12% to total revenue. Exports for FY26 stood at 16% as compared to 15% last year. On CapEx side, the investment in Hosur is progressing as planned. The facility is expected to become operational from September 2026 onwards and will primarily cater to hybrid and EV-related programs for key OEM customers. Along with that, the company has also received an approval from Tamil Nadu government for a subsidy of around 39 CR, which will start accruing from current financial year and will be available for the next 10 years. And the company has also secured a new orders worth approximately 2,500 crores over a program life of 5 years, providing strong visibility for future growth. On the balance sheet side, we continue to maintain focus on working capital management and cash flow generation during the year. Working capital days improved to 7 days from 33 days last year, while the cash flow from operations stood at 331 CR during FY26. Net debt as on March 26 stood at 686 CR as compared to 653.1 CR last year. Looking ahead, we remain optimistic on the business outlook, supported by healthy domestic as well as improving exports, strong order pipeline, and increasing participation across hybrid and EV platform. Thank you. Now we are open the floor for questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. A reminder to all participants, you may press star and 1 to ask questions. A reminder to all participants, you may press star and 1 to ask question. A reminder to all participants, you may press star and 1 to ask questions.
Till the questions come in, we can just add a little here. The railway business is coming up fast, and RDSO has given us approval, and more components are also getting approved. And in fact, the first lot was dispatched just about 4-5 days back, and they should continue even further. And we are hoping to do pretty well as far as the railways are concerned. Even in the defense, we are pushing the defense, and besides whatever we are manufacturing, that's mainly the shooting ranges, we would also be adding more to the portfolio. This will be for this particular year. The exports would grow by almost about 15-20% this year.
32%.
Oh, sorry, the exports will grow by 32% this year, and primarily to Germany and to USA. And the domestic market would also go up this year. Unless, of course, the global, the geopolitics which is happening, and that brings about some disaster, I think we are ready to reach the levels that we are talking of now.
Thank you. The first question is from the line of Deepak Podar from Sapphire Capital. Please go ahead.
Am I audible, sir?
Yes, yes.
Please go ahead.
Okay, yeah. Thank you very much, sir, for this opportunity. So just first I wanted to understand, just something on the margin front. Fourth quarter we saw a sharp decline in our EBITDA margins and even gross margin. So what are the key factors that affected it, and how should one look at your growth and margins for FY27?
So, Deepak, as I enumerated in my initial speech, that there were two non-recurring impacts which are there in our profitability. So, if you look at on a console level for Q4, the impact of labor code is almost 3.6 CR and a lag impact of 11.22 CR. So, if you include these and look at the EBITDA margin from 7.6% rises to 9.8%. For the Q4. Similarly, if you look at...
Okay, can you just repeat this 3.6 crores impact was on labor code? In
3.6 is the labor code in Q4, and the lag settlement impact of raw material is 11 CR for Q4.
On raw material. That is the lag settlement.
There is some disturbance in the line.
Yeah. I'm able to hear. Yeah.
Okay, carry on.
So if you include these non-recurring impact which is there in Q4, I guess the EBITDA which is currently appearing at 7.6% will rise to 9.8. And similarly, if you look at the entire year, currently the EBITDA is hovering at around 9%, wherein the impact of labor code is 11 CR and the impact of lag settlement of raw material is around 19 CR. So if you exclude these one-time impact, the margin increases from 9% to 10.25%.
Okay. So for the entire year, this figure is 11 crores and 19 crores, right?
That's correct. And
so your adjusted margin is 10.25%.
Yes, as against 9% last year.
Mm-hmm. And how should one look at then FY27?
So, see, currently what is happening, Deepak, there are a couple of renegotiations which are happening across customers. As KV sir mentioned, that we are reviewing our business, covering all the portfolio, looking at low margin products, and there will be renegotiation which will be happening around those products, as well as settlements of all other conversion costs, which has also seen an inflation other than the raw material, which in any case gets settled. So we expect that we should see an improvement in the overall margin levels as well, going beyond 10.25% that we have achieved last year, if we exclude the impact, one-time impact.
Okay. So higher than 10.525% is what we would be looking at in FY27.
Yes. If everything else remain as it.
And how should one look at your revenue growth?
So revenue, I guess we just concluding our budget, but if you look at, I guess, in the overall basis, we are expecting to cross 3,000 crores.
Okay. And something on the order side? I mean, you mentioned 2,500 crores order, right, that you have got over 5 years, right? So this FY27, this new order will give us 500 crores incremental?
This is basically the program which we have launched this year. The ramp up will happen for those programs. Plus, we are going to launch a couple of programs which will bridge this gap to 500 crores.
So, and the investments for the current program which have been launched, the investment started actually last year and even the year before that, like getting the land, buildings, and all that. And but from this year onwards, we'll start seeing the revenues actually flowing in. And that's what this year, and it would peak next year. That's what, yeah. So there are almost about 40 launches which are taking place at the moment, and all new products, and you'll see the impact coming up in the coming quarters. Oh, actually, end of the third quarter to fourth quarter. Yeah.
Understood. Okay, got it. And then just one last thing on, I mean, if the renegotiation which is happening across customers, if it just in case we do not get the required the increase or the escalation that we are looking for, does that mean that this 10.25% margin is what we would still be able to make, or we'll see some pressure there?
So, because 10.25% is the situation as is. So, whatever further negotiations that we are able to do and conclude, the customer will be over and above this.
Okay.
We are fairly confident that the commodities, of course, the other consumer items that we use in our system, which are imported where because of the dollar price change, they've gone up. The customers recognize that, and the oil usage that we have, the gas usage we have, and we are already in a discussion with the customer for those.
I got it. That's very clear. I mean, yeah, that's very helpful, sir. I mean, I wish you all the best. That's it from my side. Thank you.
Thank you. A reminder to all participants, you may press star and 1 to ask question. Next question is from the line of Parag Thakkar from Fort Capital. Please go ahead.
Hello.
Mr. Yes, sir.
Yeah. Hello.
Yes, we can hear you.
Go ahead with your question.
Yeah. Yes, sir. So basically, I just wanted to ask you that this 11 crore, when we are saying it is non-recurring, in Q4 and 19 crore for the full year, it is for the raw material prices which has gone up, which you are negotiating with the customer, right? And you said 75% of that is accepted.
So what we have said is that, see, generally what is the practice is to have a prospective settlements which are happening with the customer on a quarterly basis predominantly. So since the raw material is increasing quarter on quarter, we are always doing a catching up job. Now we are renegotiating with the customer to cut down the settlements on a monthly basis, and for that 75% of the customer by value have already agreed to that fact. And the negotiation for the loss which has already happened is parallelly going on.
Sir, so this 11 crore for the quarter and the 19 crore for the full year, it will be automatically increased in FY27, right?
So there's one, whatever price which will move in a monthly basis, which will settle with the customer on a monthly basis. Second, the negotiation is for the loss which is already incurred for the Q4 as well as entire year. So that discussion is parallelly. So the monthly settlement is already agreed, whereas the recovery of the loss which was incurred last year is parallelly going on. So whatever amount that we are able to negotiate will directly flow to the bottom line.
Correct. Understood. So, but what is the probability that whatever amount right now we are saying which we have lost in FY26, and so you are adjusting EBITDA margin accordingly, when you say that if you normalize it, then your EBITDA margin would have been, say 9.5% or whatever. So for the full year. So what is the probability that this 11 crore or for the quarter or 19 crore for the full year will 100% come in FY27 in your back number? Or
so when we say that our EBITDA, if you remove the one-time impact, was actually 10.25%. So that 10.25% remains protected once we have agreed for monthly settlements. If we are able to negotiate on settlement of our last year losses, that will add on to the EBITDA margins that we are currently discussing.
Okay. That is very clear. And sir, railway and defense, what is the revenue opportunity or addressable opportunity for us over the next 2 to 3 years? How should we look at railway and defense playing out for us?
Railways, I think, is moving much faster than the defense because the clearances come at much easier and faster than the defense. But I think the defense requirements are more sensitive and they take a little longer for testing, etc. So does railway also they do a lot of testing, but we also do a lot of testing for them in our plants. And we are hoping that this year in the railways we should be crossing 100 crores as far as the railways are concerned. And that's what our internal target is, and we should be able to achieve that. Defense is a little slow, and we are targeting, we are trying to see how do we cross 50 crores this year, and next year, in the next 2 years, how do we double it further. Now, this is on the current systems that we are producing and supplying to the defense. But the railways, we are more aggressive, and those clearances are coming much faster. And as railways are modernizing and 200,000 crores are being invested on modernization of the total railways, that includes the lines and the laying of lines, etc., etc. We are going to be major participants there.
Sure. And sir, when we are saying this current year's revenue of 2,480 crore is going to 3,000 crores, so it is almost around 25% jump. Why we are saying that two-wheeler is going to grow at 6 to 8% and others also are growing at below 9%. Am I audible?
Yeah, very clear.
So when OEM sales are growing at below 10% and we are confident of achieving more than 20% revenue growth, is it coming from new products, 40 products?
Parag, the projects we had taken up 2 years back and last year, where we have started investments, and those are fructifying now, and those are for the exports as well as the domestic market. So that's there, and those items we are single source supplier to all the customers, and so that and those items are going to see a major growth, and that's both for the exports as well as the domestic market. And so it's the programs which we actually started investing a couple of years back, which are fructifying now.
Okay. And
it is not, we are not talking of just a linear growth that the customers are growing by 5%, but we are also growing by 5%. What we are saying is we are getting the largest share of the market, and also we are picking up newer components like for hybrids and electric vehicles, etc.
Sure, great. And then railway and defense orders are coming at what kind of margin? It should be better than the current automotive margins, right?
We've just started supplying, so give us some time. They are obviously better than the auto margins, but we will, I think, give us 1 or 2 quarters and we'll actually tell you about the margin.
And sir, one last question from my side. How should we look about net debt? Is it going to reduce or you are comfortable at current levels?
So if you look at overall, I guess we are hovering at around 3.75 times the leverage. And if you look at repayments which are scheduled over next 2-3 years is almost 110 CR annually. So I guess we are pretty comfortable even with the debt which is there in the books as of today. But we are still seeing a downward gliding path going forward. So 120 crores in any case will get knocked off every year over the next 3 years.
Okay. And then one last question just to squeeze in, that we had this property also, right? Land on which our plant is there, and there were some discussions that there were some offers, bids in the market for that property. So any update on that if you would like to give?
Discussions are carrying on, and like I mentioned last time that we were offered 700 crores and we had said no to that, and because we were looking for a much better price, a much better value, so that we could actually reward our shareholders. And so we are working on that, and we are getting better offers than whatever we had before.
Okay. And so any timeline you are looking at over next 1 year? Can shareholders expect some?
अगर होने को तो 6 महीने में भी हो जाएगा, नहीं होने में तो until we don't get the right price, we are not selling it.
Okay, sir. Okay. Thanks.
Thank you. A reminder to all participants, you may press star and one to ask question. Next question is from the line of Hiten Boricha from Sequent Investments. Please go ahead.
Yeah. Good evening, sir. So my question is, you mentioned we are going to target 100 crores from railway and 50 crores from defense this year. So if you can share the number, what was the revenue from railway and defense in FY26? And so also, if you can throw some color and what kind of products or components we are selling to railway. You can share some thoughts on that.
See, railways we had just started, and the revenue was just about 3 to 4 crores last year, but all the approvals have come. There are, I think, 7 or 8 different types of assemblies and components that we are working on, and we've got approvals for 3 or 4 of them already, and the balance we should get approved in about another 2 months' time. Their teams are visiting us regularly, and in that the requirement is huge with the growth that is happening. And once the approval comes, I think that approval should come within 10 or 15 days for the item which we have just, the samples which we have just dispatched. And once those start off, those are huge numbers. And in the defense, we are still struggling around 20 to 30 crores, and we want to cross 50 crores this year.
Okay. And sir, what kind of products we are supplying to railway?
Basically, these are bearing adapters, SG cast iron inserts, which goes into the track.
Railway lines and the railway line, what do you call those? Track adjusters and distance blocks. There are many items.
Okay. But sir, if I'm not wrong, I think
basically where the investment is minimal, and we are using our current capacities which are available with us.
Okay. But I think in last Concall, you mentioned we are targeting something around 60-70 crores of revenue from railway and defense in FY26 itself. So I think
हुआ नहीं उसमें because in the railways even though we were ready with the productions, the approvals took a little longer time. Since now the approvals are there, so that's why the confidence that we should be around 100 C.
Okay, so now the approvals are in place. Yeah.
And it's a constant exercise. We have approval for about 5-6 different types of component assemblies, and further approvals, as we are submitting samples, we are getting more and more approvals.
Understood. And so my second question is on the capacity. So what is the current capacity utilization as on Q4, sir? For both aluminum die casting and ferrous capacity?
In the iron side, our capacity utilization is in the region of about, I think it was 65-70%.
Yeah, 70% now.
And in the aluminum side, it's also in about the same region. And of course, it could vary from the smaller capacity machines where the utilization is close to 95%, and the higher capacity machines, higher tonnage machines, we've been able to free capacities, and there we would be adding more components there.
Okay, sir. I'll get back in the future. Thank you.
This also includes the capacities that we've freed for the capacity that would be required for this year with the expansion that has taken place, and the requirement of both the iron as well as the aluminum components.
Okay, yeah.
Thank you. A reminder to all participants, you may press star and one to ask question. Next question is from the line of Deepak Podar from Sapphire Capital. Please go ahead.
Hello, I'm audible.
Yeah, Deepak.
Yes, sir.
Yeah, just one clarification. Now, because this was one-off and your fourth quarter adjusted margin was close to 9.5%, right? I mean, so from first quarter onwards also we'll see that trajectory, right? I mean, that 9.5-10% kind of margins, because this was one-off that we saw in fourth quarter.
Yeah, we will, Deepak, as I said, that even the lag settlements are getting agreed with the customer. 75% have already agreed. So we should see the kind of margin going forward starting from Q1 itself.
Okay. So from Q1 itself, we'll see 10% plus kind of a margin? I mean, would that be a fair assumption?
Yeah, that's correct.
Okay. Oh, that's it. Yeah. Thank you very much.
Thank you.
Thank you. A reminder to all participants, you may press star and one to ask question. A reminder to all participants, you may press star and one to ask questions. As there are no further questions, I now hand the conference over to management for closing comments.
Okay. Thank you everyone for joining today's call. And as we committed that we remain focused for our business growth, and we are basically in a close coordination and discussion with our customer for the recoveries with respect to the RM and the lag impact. And we have already settled the monthly indexation, which will help to mitigate the lag impact going forward in the FY27.
So one more thing I'd like to add here is that besides the railways and the defense, we have been making machine tools for a very long time, CNC machines, 14 axis, 16 axis, 5 axis, 8 axis machines. So earlier we would make them only for ourselves, but now since we had created capacity, we've also started selling them in the market. And we've just done a first sale very recently, and hopefully I will be able to give you as to what would be the total sales that we have this year, but by next quarter I think we'll be able to share with you some figures in that.
130 crores.
Thank you.
Thank you so much.
Thank you so much.
Thank you. On behalf of Rico Auto Industries Limited, we conclude this conference. Thank you for joining us, and you may now disconnect your line.
Thank you.